Well, this volatility has led some buy and hold investors to make major moves in their retirement plans. Daily trading in 401ks was more than twice the normal level at the end of October as the S&P 500 tumbled and investors moved away from equities into fixed income. That's according to Alight Solutions. 401k trading jumped again last week as the market rebounded, with investors moving back into equities. Now, 401k investors may be buying and selling on emotion instead of financial goals, and it happens often. Legg Mason surveyed 1,000 investors last summer who had at least $50,000 in investable assets. And nearly 1 in 3 admitted to making an emotional decision to sell in a 401k plan that they later regretted. More than half of them had kids in their household, and nearly half of those who sold described their investment knowledge as expert or advanced. Now, no matter how much you know about investments, though, poor choices in other areas can do even more damage to your retirement, financial advisors say. Not keeping an eye on spending, subsidizing your adult children, buying a second home that's beyond your reach, and failing to factor in retiree health care costs are all personal, often emotional decisions that can wreak havoc on your financial future. Now, the markets will be volatile. That's a given. So when it comes to your retirement savings, financial advisors say it's important to focus on what you can control. Morgan?
Sharon, I feel like this is the time of year when so many people who maybe have not been paying attention to the markets, have not been paying attention to their retirement funds, are now going to open them up and say, where do I stand on the year? I mean, given the fact that it has been so volatile, and I think in many cases they're going to find that they're either flat or maybe even lower. What would your advice be to them right now?
Well, a lot of the financial advisors I talk to say yes. The good news is that they are actually opening these statements and paying attention to them. They may be surprised if they haven't been paying attention along the way, but it's a time to then revisit where their goals are, how much they gained during the bull run, where they are right now, and if they're still going to be able to reach the goals that they've set forth. It may be that they need to be in more defensive equities. It may be that they do need to move some of their money into fixed income, but there has to be a plan attached to it and goals that you're really trying to reach, not just a knee-jerk reaction that the market moved one way or another that I didn't expect, and so I'm going to react accordingly.